Hi, my name is Denise Appleby and I am the IRA Whisperer. If an IRA owner attained age 73 in 2024 and didn't take their 2024 RMD until 2025, what are the rules that apply to that RMD? That's the question that I've been getting often enough for me to say, let me do a little IRA pop-up chronicle and talk about how the rules work. Here's how it works. If that person had taken the RMD in 2024, we know that we'll use their age in 2024 to determine their life expectancy factor. We know that the December 31st, 2023 fair market value would have been used to calculate the RMDs. The question that keeps coming up is, well, if that's being taken in 2025, does the formula change? Do the factors change? And the answer is no. The 2024 RMD is calculated by dividing the December 31st, 2023 fair market value by the 2024 life expectancy factor. And whether you're taking it in 2024 or 2025, those factors remain the same. Another question that comes up, well, it's a 2024 RMD and it's being taken in 2025. When should the IRA owner include it in income? And the answer is 2025. Doesn't matter what year a distribution applies to. The year that you take it from the IRA is the year that it's included in income, because the amount that's reported on the tax return should match the amount that's reported on the 1099-R that is issued for that distribution. Some other tips to remember: if the IRA owner misses the April 1st deadline, then they owe the IRS a 25% excise tax. But good news is that the excise tax is reduced to 10% if that RMD shortfall is taken during the correction window. And I'll include a link below that explains what the correction window is. More good news is that the IRS will waive the excise tax if the deadline was missed due to reasonable cause. So if your client comes in to see you and tells you, oh, I missed my RMD deadline and now I think I owe the IRS the excise tax, say, pump the brakes. Let's find out why you missed that deadline. And if you determine that there's a reasonable cause, then when IRS Form 5329 is filed to report the RMD shortfall and calculate the excise tax, then you indicate that no excise tax is owed. You attach a letter of explanation so the IRS knows why you believe that there's reasonable cause, and you ask them to waive the excise tax. And in my experience, they've never told any of my clients no. So there is hope. And the final thing, the final tip that I want to include is IRA custodians will send out, they're required to send out an RMD notice to IRA owners. The notice must include the calculated RMD amount or an offer to calculate the amount upon request. This only applies to owner accounts. It does not apply to beneficiary accounts. So for traditional IRAs, SEP IRAs, and simple IRAs, the IRA custodian will send out the RMD notification. Now, here is something that we want to pay attention to. If the IRA custodian calculates the RMD, they're going to use the information that's on their system. That's what they're required to do. But for us, we need to audit that RMD calculation, because there are certain assumptions that an IRA custodian is allowed to make and certain rules that they're allowed to ignore that could result in an RMD shortfall. Or in some cases could result in the IRA owner taking more than they're required to. So you want to make sure that you audit the calculation, and if the calculation done by the IRA custodian is incorrect, then you chuck that in the garbage and you redo the calculation on your own. I hope that helps. My name is Denise Appleby, and I'm the IRA Whisperer.